when they got the unit and rented out, how much did you manage to rent out for? Can you share, and what's the rental you like?
I managed to rent it at a 5.35% rental yield.
Wow, 5.35% rental yield.
Yes.
Welcome to this episode of Property in 20, brought to you by Ceekay Soh District. Property in 20 is a podcast series that discusses anything and everything related to real estate in episodes of at least 20 minutes or more. And once again, this podcast series is brought to you by Ceekay Soh District. So today, this episode right here, our topic for the day is related to what we call MOP EC. Now, what's MOP EC? First and foremost, EC stands for Executive Condominiums, which is basically a class of condominium new launches that are developed by private developers but regulated with HDB regulations. And MOP stands for Minimum Occupation Period, which means that for owners who buy ECs, they have to stay for at least 5 years after they collect the house keys before they are allowed to sell in the open resale market. And now today I have with me Wesley Lim, who will be sharing with you his insights on handling MOP EC sales. Right, so let's welcome Wesley. Hi Wesley.
Hi CK, nice to be here today.
Nice to have you on the show. Right, so right here, right now, of course, for today, we're going to talk about this topic of MOP EC. And I think the main focus here is to see whether, is this a property type that is really good for investment. And I think one of the key concerns that I have regarding this is because nowadays we see that there's a lot of new launches that are setting new benchmark high prices, right? And that is where we realize that MOP EC could be a possible option for investors. But so before we talk about MOP EC, right, in your opinion, currently right now, for new launches in the market, are the pricing too high these days?
Too high, I think that the word is subjective. My short answer is no, and I'll share with you why.
Okay.
Firstly, objectively, if we look at current prices and we base it off land costs, construction costs, and everything, I think it's moving in tandem with the market.
Okay.
So prices currently, if we look back 5-10 years, maybe people who have been on the sidelines looking to invest, they will find it too expensive because if you buy in something 5 to 10 years ago, definitely it's cheaper than current prices lah.
Okay, for sure.
So for me, how I look at things is, like I mentioned previously, the land costs, construction costs, material costs, and these are what drives up the land price and ultimately the selling price.
Right. But I think for a lot of buyers on the ground right now, the concern will be that because the rise in price, although if you mention it is in tandem with all the land costs and so on, but for buyers on the ground, they might be thinking wow, right now they are being priced out of the market because the price is going up and it's a little bit too fast for them to be able to catch up. Right. So what are your thoughts on this?
I think definitely there are a pool of buyers who are priced out, but not everyone. So for this certain group of buyers who their income are not catching up to pace with the economy, they may be priced out and may feel it's too expensive. But overall, as a whole, I still don't feel that it's very expensive. It's too high lah.
Right. So what would be your alternative suggestion for investors who are not willing to pay more for new launches? What do you think they can actually go for?
I think that's why the topic is here today, MOP ECs.
Okay.
This is my suggestion to them lah. Because why we are looking at MOP ECs is because as compared to resale condos, they are priced cheaper. Firstly, because you said they are by private developers but also regulated by the HDB and government. Prices are more or less controlled and you don't see the selling price to be as high as private condos.
Right. Okay, but do we have any recent case study that we can actually learn from that we can refer to?
I actually helped a client shortlist MOP EC as an investment unit.
Okay.
And I can share with you the journey that we went through lah.
Right, so you say that this investment unit means pure investment, not staying in it?
Yes, pure investment.
Wow, okay. I think that's something quite refreshing, right? Because most people, when they talk about investment, usually they will buy a new launch or they might buy a freehold resale for long term, or like just normal resale and collect rental. But now you mentioned that you shortlisted the MOP ECs, right, for pure investment.
Yes.
So maybe you can share with us like what was the whole process like and what's the rationale behind this?
Okay, so my clients first contacted me looking to invest in property without any indications of what they want to buy. They just know that they want to purchase something and have the money work hard for them. So I think the general market sentiment now is buying new launch. And they also felt that, maybe I can... Actually, no, their first ever line of thought was they want to buy an old resale condo and rent it out for rental income. That is their only thought process then. But I would say the general market nowadays, they are looking to buy resale. They are looking to buy new launch condos.
Okay.
Because I think everyone have the perception that it's making them the most money.
Right.
However, after going through the basic financial assessment, I realized that they actually cannot buy a new launch condo, even though that's what they were looking at: new launch condo and an old resale condo lah.
Okay, so in terms of affordability for the new launch, it was quite tight for them, like you were saying.
Yes, and then for a old resale condo, yes, they may be able to rent it high because of the current rental prices. But due to lease decay and how old the development is, the money that they put in, they may not even be able to recoup after a few years.
Right. So in that case, right, then what was the process like for you when you got your client to, purchase this MOP EC? Like from start to end, how was it like?
So first, when I accessed them, I actually asked them what are the profits they have in mind and their investment horizon.
Right.
So they were looking at a 5-6 years time frame.
Okay.
And I think it was about 100. Okay, I would say low six figures.
Low six figures as in?
Profits.
Top profit. Okay. Okay,
so
that's their intention.
That was their intention.
Right.
So we started from resale condo and I told them the older ones you may or may not even make profit, but you may get your rental income. So we actually cancelled that option. We ruled that option out. And then they wanted to buy because their affordability only allows them to buy a 1-bedroom new launch.
Okay.
So I shared with them that actually if you want to make a 6-digit profit, your 1-bedroom have to increase by a good 200 to 300 PSF, which is not very easy in this market because of the small size.
Okay.
So they were still actually quite inclined to get the 1-bedroom, but I shared with them some of my insights with MOP EC.
Right.
And showed them the numbers.
Right. So what did they go for, like the bedroom type and so on in the end?
So instead of buying a 1-bedroom new launch, they actually managed to purchase a 2-bedroom MOP EC.
Okay.
And it I never fully utilized the sum of money that they set aside to invest. So they actually set aside about 280,000
okay.
for the investment, and we spent less than that lah.
Right. So then in the end, like in terms of the price that they got, like they rented out the unit as well, right?
Yeah.
So what was the results of the investment at the moment?
Actually, the results to me, it's faster than expected.
Okay.
Upon completion, they were already sitting on the 6 figures paper gains.
Okay.
Even though that was their...
Can you explain more, like in detail?
Okay, so they actually entered at a good timing, although it's not the best, because after sharing with them the strategies, how to enter at the right time and when we were to exit, they were thinking about it for a good 2 to 3 weeks. So in that 2 to 3 weeks, actually with the same budget, we could have entered a 3-bedroom MOP EC at almost the same price.
Right.
So if they were to enter at the same time when I proposed or within the 1 week, I think their paper gain would be much more than now.
Right. So they missed out on a 3-bedroom and ended up with a 2-bed because they deliberated for too long.
Yes. And to me, this is the cause of inaction. They actually saw the numbers, they internalized and they understood. But there was a lot of hesitation because it is, I would say, against the norm. Instead of going with a new launch, they went for a MOP EC, and they had their doubts because EC, why was it priced so cheap as compared to the resale condos in the market, which I shared with them and covered that.
Yeah. So then in that case, right, like when they got the unit and rented out, how much do you manage to rent out for? Can you share, and what's the rental yield like?
So the rental yield, I think pre-COVID, a 3% was good. During the past 2 years, maybe a 3 to 4% it is considered average, or 4 to 5% will be considered good.
Okay.
I managed to rent it at a 5.35% rental yield.
Wow, 5.35% rental yield.
Yes. And it was not for a fully furnished unit. It was as it is. So just white goods.
Okay. 5.35% rental yield. Wow, that's very, very high. All right. Then how about in terms of the entry PSF?
So the entry PSF, as compared to the neighboring developments, it was lower.
Okay.
A good 300, about 200 PSF.
Lower. So what PSF was that? Around?
Just below 1,002.
Just below 1,002. Wow. Okay. So I think that's where, like, you know, my next question here is because, like, entering in at about 1,002 PSF, let's just say, right? How can you be so sure that in the future this MOP EC will also appreciate in price? Like, what's the margin that we're looking at right now?
So typically we will look at two things. One is the neighboring developments, what price are they going for? And any future land sales around the area and in the same, I would say, region.
Right. Okay. So how do I ensure that this one will be more profitable then?
I think another thing I look for in this development is the lack of 2-bedroom units. So this one is also a supply-demand issue.
Okay.
The 2-bedroom that they went for, although it is almost the same price as the 3-bedroom if they were to enter earlier, but there was also a shortage of 2-bedroom units in the area. So to me, this positioned them in a better position because of the supply issue. And then the neighboring condos and developments that are coming up, they are going at 1,005.
Wow.
So to me, the price gap is quite huge. And the upcoming ones are 1,005. If they were to sell at the resale market, the owners would definitely want to make a profit.
Right.
So ideally, they will sell at 1,006, 1,007. And this makes the demand for resale ECs more attractive.
Right.
Because of the price gap. Yeah.
Okay, that's interesting. So for someone who wants to buy an MOP EC, right, do they still need to be bounded by any EC regulations?
They will not be bounded if they are Singaporeans or PR, because once you hit the 5-year MOP mark, you can buy. But if you're a foreigner, then you have to wait for the 10 years mark after after TOP.
Right. Okay, so that's good. So that means that today, if let's say someone is interested to buy an MOP EC, as long as it's MOP already, they don't need to, fulfill the income ceiling and the family nucleus, all that, don't need, right?
No. So you can buy it as a resale condo status if you are Singaporean or PR.
Okay, that's good to hear. So now let's talk about also like those brand new ECs as well, right? Because I think with MOP ECs, of course, now we are seeing about 1,002, 1,003 PSF. Brand new ones are also coming around 1,003 PSF now.
Yeah,
brand new.
Actually, in fact, the recent 2 launches for Copen Grand and Tenet, they have even hit 1,004, inching towards 1,005.
Yeah. So I think in my personal opinion, I thought that was a little bit crazy, right? So one thing to mind is this, because like as we know with EC, the loan framework is MSR, right? Mortgage servicing ratio. So when I calculated, I realized that, hey, today, if you don't have at least 12 over 1,000 of combined income, you cannot buy an EC unless you have a lot of cash or CPF on hand. Right.
Yes.
So looking at this situation, if the price of EC keep going up, do you think the government will actually raise the income ceiling, or will they provide more grants?
Looking at this, because historically the government has increased the income ceiling once. Previously it was 14,000, now it's 16,000. Given the past action, I got a feeling that the government may just increase the income ceiling again, or like you say, provide more grants. However, these grants are also tied to their income. So to me, is if you have too high of an income, you are not eligible for the grants.
Okay, that's true. That's true. Right. Then in that case, right, if they keep increasing, I mean, it sounds a bit crazy, right? Because like income ceiling, of course, like you said, it was raised from 14 to 16. Before that, it was actually 12.
Yeah.
12 to 14 to 16K. So logically speaking, looking at the pattern, maybe the next income ceiling is like
18K.
Yeah, 18K, right? So if that is the case, right, like one thing that I have like a concern about is that is raising the income ceiling a fair move? Because it looks like it will just benefit the higher income earners, when EC, as we mentioned in the beginning, is meant to be for those so-called middle class earners, right? Last time it was meant to be like for those who are not making a lot of money, you know. So we are providing them a housing option for this group of people. But as the income ceiling have increased, my feeling is that then those people who are in the middle income range, they are being left behind. Right?
Yeah.
So what's your thoughts on this?
I agree with you that if they were to increase the income ceiling, then these people who are in the median range will be priced out, because by increasing the income ceiling, it only helps the high earners. So I think the more logical way to do things is to change the way how it's assessed, by maybe possibly changing the MSR, because MSR is used for HDB as well, and HDB is of a lower quantum. So by using the same 30% MSR for HDBs and new launch ECs, I think it's very unfair, because you must be the top earners and still not hit the ceiling to be qualified for a 75% loan.
So what would be your suggestion then? Like, what should we adjust the MSR to?
I think minimally 35, within the range of 35% to 40% is good. Anything higher, I think there will be some resistance.
Okay.
But this buffer will actually help more people take more loan and have a lesser upfront payment, because personally, I have served clients who are in the same position. I think they are only taking a 57% loan.
Right. Because of the MSR issue now?
Yes.
Okay. I think that's a very good point to talk about, because like I've noticed a trend whereby a lot of buyers who wanted to buy EC, right, their income is not bad technically, like maybe in the 10 to 11,000 range, right? But they do not have enough down payment because of MSR, right? They are not able to take up the full 75% loan. And then in the end, they have to be so-called forced to buy private condo instead.
Yes.
Yeah, because of their loan eligibility. Like something that is very interesting. People don't realize that like I can get a loan more easily for private compared to EC if their income is below 12,000.
Correct. So they're actually forcing these groups of people to turn to private. Then that is exactly what my clients almost did. They were lucky enough to secure more funds, so that they were able to make this down payment. If not for that, they would have went ahead with a private condo purchase.
Right.
And then it will also be quite a stretch for them, because for EC is very comfortable.
So right now today, based on the current market, right, for MOP EC, what is the going rate for the PSF right now? For most of those at MOP, let's say this year?
I would say 1,003 plus minus, 1,003 to 1,004.
1,003 to 1,004. Okay. So that sounds like a really quite undervalued price, because now if you look at new launches, it's at least like 2,000 PSF and above.
It is. And then these new launches, when they hit the resale market, definitely they will be priced. Okay, my observation is ECs are all in the OCR, which are always in HDB estates. So actually, these are in a way for HDB upgraders as well, and not in very prime locations. So if you compare the launches in the OCR, they're upcoming at 2,000, and you compare with MOP ECs, the price gap is actually very huge. So if now the selling price is about 2,000 PSF, next time the resale market, you will see 2,002, 2,003. And to me, this is a good time to leverage on that gap and enter, so that when the gap is so huge, the MOP ECs will actually increase to fill in the gap.
Right. So that sounds like a very fair reasoning why you actually recommended your clients to look into MOP ECs.
Yes.
Right. Okay, that's very good. Right. So I think in this episode, what we have really covered is really, like why Wesley decided to recommend MOP ECs to his clients. And I think that like today we have really concluded a very good idea here, right? Because just now Wesley mentioned that his client actually gained on paper gain, right? Just invested like a few months back, and on paper now it's really like 6-figure profit margin, and as well as a rental yield of around 5.35%. And I think personally that is a very, very beautiful thing, because a lot of times for buyers who are looking to invest in the market, of course, not saying that new launch is not good, right? I think new launch still have its own merits. It's just that the entry bar is pretty high, right? So one good thing that Wesley have really shared today is this option of MOP EC, whereby we can help to identify, right, which are the MOP ECs in the market that can provide a good upside. Because as what Wesley mentioned as well, MOP ECs are mostly in the OCR area, right, in the so-called heartlands, and it is where we have to identify which one has the highest potential, because not every MOP EC have the same potential as well, right? So that is where we have all the ideas of what are the right MOP EC to go for and so on, right? So Wesley, before we end off today's show, maybe you can just share with us like today, if someone wants to know more about MOP EC, right, what would be the process that you go through with them before you derive like which is the MOP EC to go for?
I think the shortlisting of a project is very standard. Your typical shortlisting in terms of location, proximity to transport and amenities nearby. Mm-hmm. This is pretty standard. But in my research, I've also noticed, I would say, secret, not really secret, but if you look at the numbers enough, you will know. But I don't think this is something all agents know.
Okay.
So this one I will usually share with my clients after assessing them and making sure that they are on board with the MOP EC.
Okay. So what kind of comparison will you do as well for them?
Of course, after assessing them financially, mm-hmm. I will show them the entry price of the MOP EC. Mm-hmm. With regards to the neighboring developments, mm-hmm. and any upcoming developments that can help to push and give the price support that we are looking to exit.
Right. Okay, that's very good. Right. I think that is where like it's beautiful to hear, because in the industry, a lot of times clients, they do not know exactly what kind of property that is really suitable and how do we determine whether a property is profitable or not. Right. So in terms of this, like we can hear from what Wesley have just shared is that there are certain methods to it, like what you said, secret, right? Okay, but of course this secret is meant, for us to really share with our clients, like some of the unknown things that most property agents will not share, right? Because some property agents, like maybe, right, their concern is that, hey, I just want to close the highest possible commission, right? That's why, like, for example, for the case study that Wesley brought up, right, maybe another agent will brought the client to just buy a new launch 1-bedroom already. But yes, Wesley found that, hey, actually there's a better option here, right? Instead of going for a 1-bedroom new launch, why not go for MOP EC? And immediately, right, this client is now sitting on a 6-figure profit and the 5% rental yield. So that is where I think in terms of this is a beautiful, option out there, that I personally also feel that, like today, if you're an investor, it is definitely one of the options that you can seriously consider, right? So if you're interested to look more into MOP ECs, of course, you may contact us, right? At Ceekay Soh District, you can contact Wesley as well, right? So Wesley, how can people contact you if they want to find out more about MOP EC?
I think if you are on social media, you can look me up on Instagram.
All right, what's your Instagram
My handle is Wesley LKY.
Wesley LKY, easy to remember,
Yes,
Wesley
LKY.
But it's not Lee Kuan Yew, okay?
It is not.
Yeah. Okay, so you can PM Wesley at Wesley LKY if you want to find out more about MOP EC. Alright, so that will be all for today's episode, and we look forward to see you in the next episode of Property in 20. Alright, so thank you, Wesley, for being on the show, and we'll see you in the next episode. See you.